Good morning, everybody. Looks like my screen sharing is not working very well. I'm going to give it another go. Great to have you here. So, it would be really great if anyone in the chat can quickly confirm that you can hear me well. You may hear some sound in the background. Cleaning lady's busy. It's very good. Won't take long. Thank you. Hi, Liva. Hi, Desiree. Really good. Thank you, everybody. Great to have you here today for a 40-minute webinar, a compliance deep dive on permanent establishment risk. My name is Pieter Mande. I'm one of the co-founders of Workflex. My background is I'm a tax lawyer, Dutch, so working here from my home in Amsterdam. I've worked at PwC for quite some time, 13 years, so 3 years, always in the department specializing around employer compliance when people temporarily or permanently work from somewhere else, so global mobility, basically. Started my career in the Netherlands, moved to Germany for a couple of years, and although we did move back physically, I always remained active in Germany. Then at some point, the pandemic happened, so work was disrupted, global mobility was disrupted. Exciting times. Also for PwC, by the way, they then carved out Vialto. Well, didn't think that was a very good idea, so I basically created my own carve out and left PwC and then founded Workflex. So we're now 1.5 years old, more or less, and our ambition at Workflex is to build the work from anywhere compliance platform, assuming that work will be more and more from anywhere over the next decade. Employees are pushing for this. It's a great benefit, more freedom. Employers are also pushing for this because hiring talent from anywhere is much more interesting. Also allowing this flexibility is very interesting. But of course, employers are also sometimes struggling with this very strongly because of the compliance topics around this. So back in the day, we went live only with the workations proposition at Workflex, so supporting employers to compliantly enable workations. But we've now launched basically this week our business travel compliance solution as well. And what you'll see over the next months and years is that we gradually build towards this truly work from anywhere compliance platform. All right, so much for an introduction. I see a good number of people have now joined. Great to have you here. Good morning. Happy Thursday it is. We're going to talk about permanent establishment risk, PE risk today, and then of course, especially in relation to workations. So how big is the risk that a workationer or a group of workationers constitute a so-called permanent establishment, a Betriebsstätte in German, in the destination country? So I've already received a couple of questions up front from you. Really great. Thank you for this. And I will make sure that they, well, at least try to answer them in the course of this session. But maybe we have to take one little step back before we dive into specialistic questions. If you have any questions throughout this session, please feel free just to use the chat. Some people have already found it. Really great. Just ask. I'm all by myself today, so I might, I'm also a guy, obviously, so I might have some trouble managing two things at the same time and doing, telling you a story, plus keeping an eye on the chat, but I'll try my very best. So I need to start with two statements, bad news and good news. So the bad news is that the consequences of constituting a permanent establishment are absolutely disproportional to any employee benefit. What it basically means is that employers in the sphere of workations, at least, are very hesitant about PE risk, like very big risk, bad and bold. And that is the case. Constituting a PE really does not, it does not, let's say, justify providing an employee benefit like workations. In other words, if you as an employer know you're going to constitute a PE as a result of your workation program, you're not going to introduce a PE, a workation program. So that's bad news. There's also good news though. And that is that there's no permanent in temporary work from abroad. And obviously, in order to constitute a permanent establishment, at least some permanency is required. So we're going to talk today about where does this, let's say, where does the black area start? Where does maybe the gray area start? But of course, most importantly, where is really the white area? When is your workation program safe enough? And what should you do to keep it safe enough in order to really, really not constitute a PE? So I took this from our website, www.getworkflex.com, and you can look at the various compliance risks related to people temporarily working from abroad, either as part of a workation or as business travel. So you can already, let's say, educate yourself there a little bit. And this is what you'll find if you look up the PE risk, the corporate income tax risk, because for those of you who didn't know, permanent establishment is definitely a corporate income tax topic. Also some value-add topics, value-added tax relationships, but like the core of this is really corporate income tax. And what does it mean? If a workationer constitutes a PE, it basically means that the workationer, for whatever reason, has created so much presence, or the official word is substance, in the destination country that the authorities from the destination country can say, or at least can claim, there's quite a lot of presence of your company here now in the destination country. And because you are present here, because you have substance here, we would like to tax your profits. So you need to pay corporate income tax. That means you have to allocate the profits to that PE and then file a corporate income tax return and remit the corporate taxes accordingly. Monetarily, so financially, this may not be the biggest issue, because you can imagine if you've only got 1 or 2 or 3 people workationing around in a particular country, also not for the entire year, but only for a couple of months, you can imagine that the profits that need to be allocated are relatively low, and as a result, the tax burden in that country would also be very, very low. The problem is the administrative burden, and basically even the threat of getting into a big discussion with the tax authorities from the destination countries. First things first, the administrative burden. If you have a PE, you'll have to register the PE, and you'll have to allocate the profits, which is also, let's say, an administrative thing. You have to get, let's say, documentation in place for this. And then, of course, you have to file the corporate income tax return, which also doesn't do itself automatically. You will need expensive providers for this to help you. So all in all, the admin burden is really, really terrible, and makes the PE risk, if it materializes, absolutely disproportionate to this great benefit of providing a workation. So it was the administrative burden, but also the threat of a discussion. And why is that important? Well, none of the tax and legal risks that we know basically around the world, whether we're talking national law or international law, OECD guidelines on these topics, none of them were written for the current status of work. None of them were written for workations. None of them were truly written for like permanent or significant remote work. So the regulations are just unclear. And that means that the authorities in the destination countries, in the destination country of a workation, might already claim the existence of a PE early before, well, you and I would say that there's truly a PE constituted there. And then you run into a discussion, and discussions are not cool. You can just Google, Netflix is actually currently being accused of having a PE in India because of a couple of business travelers and expats working there for some time. And that's going to cost them a lot of money, not only in terms of taxes. We're talking, I think, 5 million, which is, let's say, for Netflix, an acceptable amount. But I think they're going to probably spend at least that amount on the discussion with the Indian authorities as well. And then maybe even like half again the amount on the administrative burden of allocating the profits retrospectively, of course, because the Indian authorities are definitely also going to want to have a piece of the pie looking back. So that's basically what happens if you have a PE. But when do you now really have a PE? There's three, well, there's actually four, but let's focus on three types of PE and then quickly drill down on to the one which is basically most relevant for workationers. So the first one, and probably the most well-known type of PE is the fixed place of business PE, the FPOP. Basically, a building is usually the best example. If you have an office somewhere, or if you have a store somewhere, if you have a warehouse somewhere, that creates a fixed place, and that will usually trigger a so-called fixed place of business, PE. It needs to have some type of permanency, it needs to be fixed, and that usually means that the existence must at least accumulate 183 days in a tax year. Well, obviously for a office, that's not very difficult. Same goes for a warehouse. It gets already a little bit more interesting if we're talking home office, or if we're talking workationers, of course, because a workationer is usually not going to be in the destination country for such a long time. Another important criterion for the fixed place of business PE is that the place, so this fixed place, needs to be at the disposal of the company, so of your company as the employer. Again, with an office, not very difficult. Same goes for a warehouse, but yeah, it says home office here on the slide. That's definitely another interesting aspect, something that many tax authorities today are working on. Also, the OECD, by the way, is the question: to what extent are home offices, in someone's home, but maybe also in someone's vacation home, when we're looking at workation, to what extent would those homes qualify as a fixed place of business, but also especially a place which is at the disposal of the employer? Is a very interesting question. Obviously, is if your employer knocks your door at your holiday home and they want to come in because they say it's at I want to see your workplace, you can simply deny them access, which would logically mean that place is never ever at the disposal of the company. But some tax authorities do seem to disagree with this. There's a very interesting discussion going on around this. For workationers, not the most relevant discussion, again, because usually you will not meet this fixed place criterion anyway. Last one, you need also to conduct business through this fixed place of business, which is at the disposal of the employer, which basically means that preparatory and auxiliary activities performed in this place would exclude the existence of a PE. So auxiliary and prep are supporting services. So if you only have, let's say, an HR shared service center or so in a particular country, one may claim that this is not a place where you then conduct the business, but it's only preparatory and auxiliary. For workationers, that would also definitely be an interesting statement to make, saying that workationers, when they are on workation, are usually only doing the prep and aux activities, so prepping their regular work and not maybe closing the big deals if they're in sales, or making or participating in board meetings if you're looking at senior management. They're usually just preparing this type of activities, maybe. That's the first type of PE. Second type, dependent agent PE, very relevant for workationers. Thankfully, not relevant for all employees. We're only looking at people of which the company is really dependent. And usually you would then limit the group of individuals to truly senior leadership, senior management, C-level, people with the power of attorney, assuming not too many people within the company have a power of attorney. And then also especially people who are in the sales department. And the more senior you get in the department, the bigger the risk becomes that you are a dependent agent. Why is this the most relevant type of PE for workations? Well, for two reasons. The first one is that this type of PE can also very well be constituted if your existence or presence in the destination country is below 183 days. So even technically in a week, you could constitute a dependent agent PE. And the second reason is, other than the third type of PE that we're going to discuss in a second, the service PE, a dependent agent PE is a very common concept. More or less every country in the world, let's say, recognizes this concept, and that's different for service PE. So basically, wherever your people are going to go, you will have to make the assessment, and that is what we do with WorkFlex also. You have to make the assessment, are we talking a dependent agent? If so, can we maybe manage the activities of this dependent agent in such a way during this workation that the likelihood of constituting a PE is mitigated? Yes or no? We'll focus on that a little bit more in a second because, of course, a couple of questions around this came in. But quickly first on the third type of PE, service PE, which is a non-typical type of PE in the sense that it's usually not included in, let's say, OECD tax treaties that are based on the OECD model, and more or less all of the tax treaties in the world are based on the OECD model. I think this originates from the UN model for tax treaties, but it's not really relevant. What is much more relevant is that there's simply a couple of countries in the world that have recognized the concept of service PE. Well, what is a service PE? It basically says, I don't really care whether you have a fixed place or not. I also don't really care whether we've got dependent agents working in our country. I just care whether there's enough presence in my country accumulating to, let's say, 183 days. And that would already be a reason to assume a PE exists. So this basically means it doesn't really matter. Whomever is here in the destination country starts working towards that PE. So the good news is there's like the vast majority of countries do not recognize this type of PE. The bad news is, well, a couple of do, and it's obviously a big threat if you look at your workation program. The most famous country in the world that does this is India, but there's also countries closer by. In some of the tax treaties that the Czech Republic has, there's a service PE. Portugal recently adopted a service PE-ish internal policy. So that's definitely a topic, and another reason why you should always look into each workation request separately. Of course, we do this with WorkFlex as well. So, and that also leads me to the first question that was sent in already prior to this session. Again, please, if you have any questions now, start typing them. I will try to answer them in the process. But there was a question whether or not the accumulation of workationers in a particular country increases the PE risk, yes or no? And that's a very good question. If we, let's say, quickly run them through these three types of PEs, you'll get the answer. Probably by now you've already gotten it to a certain extent. For a fixed place of business, maybe a little bit, but probably not. Why not? Because even if you've got multiple workationers in a particular country, from my perspective, and also from the experience that we have at WorkFlex, the likelihood that these people work in the same place is that would make this place a fixed place pretty unlikely. Then we're talking maybe a group of people going on a offsite or on a business trip working on a particular project. But if you're looking at pure workationers, unlikely that they will constitute a fixed place of business PE. For dependent agent PE, hopefully that was clear, you really look at the individual here. So the accumulation of workationers for this type of PE is more or less irrelevant. Here it's much more relevant if the same individual travels to the destination country more often, or simply if the duration of his or her stay is extended, simply long. But the accumulation doesn't really matter there. However, for the third type of PE, accumulation can be very relevant. And the honest answer that I have to give you is it's a little bit unclear. there are strong signals that at least India and the Czech Republic are saying, yes, accumulation of separate workationers definitely matters to us. Simply, they say, yeah, service PE doesn't depend on one individual. It simply depends on the overall accumulated presence in the tax year. And as a result of this, 2 or 3 workationers, either at the same time or not, but still in the same tax year, definitely increases the PE risk. So another reason to make sure that you basically track your system, track your workation program. I wouldn't say it's an immediate reason to not allow anything to India, because don't underestimate the number of people, Indian nationals, that work, for instance, in Germany and use the workation program of their employer to visit their families over Christmas or something like this. So it's a very interesting benefit for them. Yeah, for you as an employer, definitely something to take into account. And another reason, basically, to put a system in place to check. Annika, I see a question coming in from you. Great, thanks for this. Can you please give some examples where financial authorities found out about a workation and where there were consequences for the company? And what were the consequences? Yeah, good question. So the reality is, right, workation is still very new. And usually you would only find out about issues that came up years later. I mentioned the example of Netflix, where probably business travelers, not workationers, doesn't seem like this, probably business travelers and expats constituted a PE. So this only recently came out. So the let's say the first tax bill for Netflix in India now came in 2023, but it actually concerns the years 2020 and 2021. So you're working retrospectively. Does it mean that there is not an issue now? I know of various examples where things have gone wrong. Most clear example is also workationers constituting a PE in India, but the employer addressing this upfront, not waiting until the authorities would claim this, but the employer basically determining, there's just too much presence here now in India. In order to make this work going forward, we'll just make sure we're registered there ourselves. It's still a costly exercise, but of course a lot cheaper and a much more comfortable situation compared to the situation that Netflix is in now. And then there's a couple of other situations where basically workations triggered shit hitting the fan, excusez le mot. Those are sometimes related to PE, but more related to things that you find out immediately. Entering the country, for instance, in Switzerland, without a valid social security certificate, or things like this. The PE topic will likely only really come out only a couple of years from now. Maybe the best example, Annika, is that the reason that companies really strongly restrict their workation programs today to 30 days, 60 days, also from within the EU, the core reason is probably PE risk. So it's not even, let's say, the risk really materializing, because then you've lost big time. But even the slightest threat of losing is already a very good reason for employers to now really strongly restrict their program. So I think that's the key consequence. You see the restriction of workation programs, that's the consequence now, because the consequences of really constituting a PE, they're always the same, right? So you're going to pay a fine because you did not register, and you're going to pay your taxes too late. Then you need to pay your taxes, which is not the most painful thing, but the most painful thing is probably the administrative burden. Plus, also in the case of Netflix, doesn't really look good for your brand. Because, of course, why did India do this for a particular case of Netflix? Pretty simple. Of course, there's also a lot of Indians having a Netflix subscription. And somehow the Indian authorities seem to have struggled, let's say, taxing that presence, only revenue of Netflix in India. And they were very happily to catch a couple of business travelers and expats there, and now saying, well, now that you have a PE with us, we're also going to tax the income from your very significant subscriptions in India. And of course, you might ask yourself the question, and at least I do as a tax lawyer, think you have a kind of an obligation to also do things right. And you might ask whether Netflix should not have already done this right earlier. So it doesn't really work well for their brand. Same goes, by the way, for like all the digital companies from the US working in Europe. Hopefully you've seen it on the news over the past years. Not for nothing are we trying very strongly to somehow tax their digital presence, which is only digital, in Europe. This is simply a topic. So it also hurts your brand quite significantly. Hope this answered your question. If not, then please ask a follow-up question. I'm a guy, right? So I have a paper here with the questions that were asked up front. So I'll just quickly read it for you. So there's another question. This was the one I answered. It's interesting. The accumulation of presence of workationers, especially if there's no double tax treaty in place, for instance, between Germany and Brazil. So I've already talked a little bit about the accumulated presence, right? That it matters a little bit for fixed place, probably doesn't matter too much for dependent agent, but definitely matters for service PE. How do tax treaties play a role in this? And that's very interesting. There's in two ways, basically. There's always two layers to PE. And then let's see if we come to the answer to this question if we go through them. First is the existence of a PE is always determined not on the basis of a tax treaty. It's determined on the basis of national law. And then you would, for instance, say maybe in Brazil, there's a service PE concept there. There were workationers here accumulating to more than 183 days. And let's assume the authorities are really interested in seeing this PE present, or you as the company, you really want to do things right, and you reach out to them and they say, yeah, I think we do indeed have a service PE here in Brazil on the basis of our national legislation. But then the second layer is, okay, let's have a look at the tax treaty. And what does the tax treaty say? Well, between Brazil and Germany, if there's no tax treaty in place, I don't know all tax treaties by heart, but if there's no tax treaties in place, it's pretty simple. There's nothing to look at. So if Brazil says there's a PE, I want you to tax things here, and there's no tax treaty that would claim, let's say, anything different, that's where the story ends. So that definitely increases the risk, because what you could also see is if there's a tax treaty, the tax treaty might say, well, great, Brazil, that you have this service PE policy adopted in your country, but it's not in the tax treaty between Germany and Brazil. I don't know, right? But it's just an example. Let's assume that in the tax treaty, all of this service PE concept is not included at all. That would then be a very good reason to say, well, yeah, we kind of agreed that there is a service PE for Brazilian national law, but looking at the tax treaty, the taxation of this individual will not be, let's say, accountable for Brazil, because it says no service PE concept. The taxation would remain in Germany. And what does this mean? I don't want to make it too technical, but for me, it's very interesting. It actually means that you will still have a PE in Brazil, but that there is no taxation there. So you would do basically an empty tax return. You'll still do a corporate income tax return, but basically say, yeah, there's no corporate income. So you can imagine the taxes there are then very low as well. So that's what you could see, and that's how tax treaties play a role. Usually they can make things a little bit better and easier to understand, but they will not always save you from a PE determined on the destination country only. Hope that answered the question. Again, if not, please let me know here on the chat. 2 questions remaining. Think we're good in time. Are there national authorities that recognize a waiver? For instance, when the employee signs that he or she will not engage in commercial activities like contracting or price negotiations during the workation. Is a waiver an effective measure against the establishment of a PE? Very good question. So basically the question is, all right, someone goes on a workation, but we, the employer and the employee, we kind of agree that this individual is not going to do those activities that would usually create a dependent agent PE. So no commercial activity, no senior management decisions, that type of things. Very good question. And it's definitely something you see a lot in practice. It's also, I have to admit, something that we drive at WorkFlex, because the answer to the question is in German, ja. So yes, of course it helps if you just determine or you agree with your employee that he or she will not do particular activities, and the employee, let's say, either digitally accepts this or confirms this or whatever. That's really great. Why? Because you can show to the authorities, hey, I've tried everything to do what I can. And secondly, if you and I agree on something, I kind of expect you to keep things to it. So the likelihood that all of a sudden this employee will still do these commercial activities in the destination countries is much lower. What's the no part of this answer? Yeah. At the end of the day, a PE is not determined on any paper truth, so to say. So you can put all the paperwork in place to somehow say there's no commercial activities taking place or whatever. But if in reality that paper truth is not real, and the individual is in fact doing all types of commercial activity, yeah, that paperwork is not going to save you. So in that sense, if it's just a paper truth, it's not going to work. But if it's just let's say, a measure to realistically prevent these activities from happening in the destination country, it's a very, very good tool. So highly recommend it. As I said, WorkFlex, we also do, it's part of the process. And yeah, it's a very strong measure. Last question. Is it relevant for the national authorities whether an employee in sales work performs more commercial activities or P&E without contact with customers and programs for the company during the workation? Is the risk of establishing a PE lower for workation of PE employees than for sales employees? I saw this question up front, and I'm not entirely sure what P and E stands for. So, for if the individual that put in this question, or anyone else, maybe knowing what P and E stands for, would be great to have this. But maybe I can already tell something about, let's say, we're talking again dependent agent, right? Remember, for service PE, but also for fixed base of business PE, sales or probably something with procurement or so is irrelevant. For service PE, the sheer existence is relevant, and for fixed base of business, only the negative preparatory and auxiliary is relevant, but that's very different from sales. If you, for instance, look at for tech companies, engineers, they're usually, or they're more or less never going to be a dependent agent, unless they are the CTO maybe, but they're not going to be dependent agents. They don't do sales. They do not create local value in the sense that it's relevant for a dependent agent. But they will definitely will account to the fixed base of business PE risk, because it's very clear that engineers for a tech company do not qualify as people that do preparatory and auxiliary activities. So there, it's definitely relevant. So back to dependent agent, what are the activities that matter? Back in the day, so when I started my career, basically, it was never really clear. But at least there was some international consensus, at least amongst OECD member countries, saying if you really sign a sales contract, so you're the one signing it, not negotiating about it, not drafting it, not working on the project or on the deal beforehand, but you really sign it, that's what is, let's say, the trigger for a dependent agent risk. Especially if you sign more than 5 contracts, then it's more or less undeniable that you will have some type of a DP, a dependent agent P, in the destination country. This changed because obviously many countries would find this a little bit too easy. It's simply for a company too easy to make sure this doesn't happen. whilst still having a very significant presence in the destination country. So what you've seen over the past 10 years basically is countries letting go this very clear dependent agent definition, and definitely moving more towards, let's look at the overall picture. So they've broadened the gray area around this. And for instance, what they now say is, if you've already participated in negotiations up front or you've drafted a proposal, that's definitely DP relevant activities. And just signing, well, signing obviously is a red flag, but just signing is like much more things than signing are now considered DP relevant. So also for, let's say, medium sales level individuals, you have this risk increasing over the past years. Basically, the gray area really getting bigger. So basically another reason to make sure you have a system of controls in place here, where you, for instance, take the mitigation measure of agreeing with the employee, but especially, of course, also simply tracking what the employee is going to do and keeping an eye on the overall sales presence in a particular country. Right. Almost out of time also, 3 minutes left. That leaves just enough time to thank you for being here. If you'd like to know more about compliantly enabling workations, obviously you should go to getworkflex.com or reach out to me on LinkedIn or via email. It's simply my first name, last name at getworkflex.com. But yeah, you made it to this session, so you'll be able to find us also for a demonstration of the solution. If you're interested in business travel compliance, please also do reach out, because as I said at the beginning, this is something we've now started offering too. Really exciting. If you want to learn more about PE, always happy to be of help. But of course, there's also a lot of tax advisors in the world who'll be happy to be of help as well. And they also need to eat, right? All right, 2 minutes left. I see no open questions. Unfortunately, no one could help me with the abbreviation P&E. I also Googled it myself, to be honest, but apparently it's simply not an abbreviation, which is super common. So I guess it's okay that I didn't know what it was. Still, I hope I was able to answer the question. Again, thank you for being here, and then I wish you a happy rest of the day. Goodbye.